Okay, I think it's a good moment to start. I think the after lunch session and also somewhere on the third floor, hidden away, but sometimes you find the best gems somewhere hidden away. So quite some pressure. Today, what we're going to talk about, or at least this afternoon, it's about driving or navigating supply chain finance. I think also already in this morning session, it was said that supply chain finance will be more important due to the kind of geopolitical risks, what we have seen also with the tariffs, but it was also already mentioned with the use of AI as a kind of use case for AI to look more into kind of supply chain financing as well. So with me is Dan Smith from Orbion. He will explain a bit more about Orbion later in his presentation. But then you've been in supply chain financing for quite some time, but also you've been in corporate treasury also for quite some time. So hopefully you can bring the kind of experience both from the fintech or solution side, the financing side, as well as the corporate treasury side all together in your presentation. All up to you.
No pressure. Thank you so much. Great to be here today. I've been here 20 hours. I've already managed to sprain my ankle. So you can call me the English patient. So hopefully you'll remember that session on that basis alone. So I'm going to introduce you to who Orbion is, because I'm sure there's one or two of you may have maybe not heard of us. So a little bit about Orbion. We're a joint venture founded by SAP and Citibank back in 1999. So we are 25 going on 26 years, and we've been taken into private ownership since 2003. We solely focus on working capital solutions, specifically really on the payables slide, but we have a number of product suites that support all payables initiatives, which we will dig into in a bit more detail. We have 5 offices globally, so one on the East Coast, one on the West Coast of the US, of course. Our main head office out in London, another office in Munich, and another office in Czech Republic. A few unique things about us. We offer a solution where we fix rates for suppliers so they can predict the financing across a period of time. So it could be 6, 12, 24 months. They can lock in these rates. Beauty for them is they always know what they're going to be paying, regardless of the fluctuation of interest or the base rates. So again, this is a solution that's unique to us. We've now done 310 billion plus USD trade flows, and you can see a few of our referenceable clients there. And lastly, which is very important to us, is the King's Award that we were awarded for export trade finance. The reason for this is we're the only ones to ever win this award in our space, and it was nominated by Rishi Sunak, the Prime Minister at the time. We were fully audited. Our chairman, Tom Dunn, picked up the award from King Charles III himself. So there's a little bit about Orbion. So I think it's probably fair to say the last 20 years have been quite some torrid times, really, from a financial perspective. Global financial crisis back in 2008, of course. Euro era crisis, Brexit, trade wars, COVID, you name it, it's continuous. And I think, as we even go in today, we see inflation still remains very high. Interest rates remain high. There's, I could talk from the Bank of England's perspective. They're really struggling to get that right balance at the moment. Enough said probably about the geopolitical scenario, but of course, perishable, non-perishable goods have almost doubled in this period of time. Now the new thing, I think the new topic that we all like to talk about is tariffs. And what those are going to be, how are they going to impact corporations going forward? And I think, it's a hot topic. We will see how that ends up. But one thing that's very notable, I was reading over the weekend, is about the peak of export goods from China to the US actually peaked in July. So typically it will be in October. So we've seen little to no freight now actually at US borders, which is very interesting, I think. And then lastly, optimizing inventory, I think, has always been the hardest challenge for corporates, managing their working capital. You look pre-COVID times, the car manufacturing industry would always focus on just-in-time inventory. I think that's something of the past. There's a huge balancing act now across your cash conversion cycle. And inventory is probably the one that I would say is very hard to solve still. So we've got a quick poll here. So I wanted to just ask, and I think you can vote via the app. So has your company adopted an approach for tariff mitigation? Simple yes, no, something you've been discussing. %, no. Well, there you go. Interesting. So no one's listening to Trump, so that's probably a good thing. Maybe it's so short term. Yeah, I thought there might be a few yeses and maybe in discussion, but I think that's quite definitive, so I think we can probably move on from that. Okay. Excuse me. So I want to talk about a second wave of sort of payable solutions. So a number of you be familiar, I'm sure, if you've worked at corporates and in Treasury for a number of years, about supply chain finance. I mean, it's been around since the days of confirming from out of Spain in the early 80s. It's obviously changed, it's evolved throughout this time. But I think what we're seeing now is more corporates are evaluating their supply chain finance programs for a number of reasons. They want to also expand scope. Sole bank solutions are fit for purpose, of course they are, but naturally we work in a very global structure across 5-6 continents. So the beauty of having solutions where it's very bank agnostic and provides that opportunity for all suppliers to join a program and ensuring it's scalable, I think is really important. So what we do see is typically that there are a lot of negotiations that aren't necessarily hitting the mark. They're not getting those terms extension with the suppliers and obviously achieving the working capital that they're trying to achieve. So also with fintech providers, we find that we're able to scale these solutions much easier. We have more manpower. We're able to take a lot of the hardship away from the banks. They still partner with us. You know, they're very critical and always will be within supply chain finance. There's no world without banks funding these, but what we do is we're able to streamline and scale these supply chain finance solutions going forward. That said, there's the need to increase working capital much quicker than there ever was before. We often hear from treasurers, I need to improve my working capital by 50 million by October. Like, okay, good luck. But we are trying to work on solutions where we can support this, where actually we're trying to bring solutions available to the treasurer where it doesn't involve arduous stakeholder engagement across the organisation, removing procurement out of the conversation and truly having a treasury-led offering. Of course, this also means that the suppliers aren't involved, so therefore we can fast-track working capital. We will talk about this a little bit more, how we segment and how we use AI and all the data-driven expertise that we have in a bit later. Other things of note for how to choose your SCF provider, I won't go through all of this, quite a detailed slide, but you'll be able to pick it up later, is ensuring regional availability, all suppliers in scope, efficient supplier onboarding, but truly that bank agnostic approach, because if you think about it, there's no one bank that can solve everything. We can also create commercial viability for our suppliers through creating a little bit of tension for the banks to come in more competitive onto our programs, because ultimately we do all the payments as an organisation. Equally, we do the KYC, the AML checks. This is something we're removing from that bank, which makes it far easier for them to grow their trade finance book as well at the same time. And good to know that all of our solutions as well are achieving a non-debt solution or facility for accounting treatment purposes under IFRS, which obviously without that we would be struggling somewhat. So I'm just going to quickly explain, just to make sure I haven't lost you all, and also that you understand the difference between supply chain finance and something also that we deployed in 2023, payment with terms, what the differentiator is, and then I've got another poll. So supply chain finance that you're probably familiar with is around typically procurement going out there, negotiating extended payment terms, utilising the corporate's cost of borrowing and being able to leverage that to the supplier. Okay, quite standard, but it does take a lot of people in the organisation to deliver on this. Payment terms is somewhat different and also opens up a world outside of trade payables or typical trade payables for supply chain finance. So if you think about unfair trading practice suppliers, or you think about utility suppliers, we can pay those suppliers which typically on immediate or 15-day terms, pay them on the maturity date, and Albion gives a credit term extension, essentially, say, 60 days later. Therefore, eliminating the need to engage with procurement, therefore eliminating any conversation with the supplier, and being able to prove your cash flow. And it is non-debt, and we can talk about there may be some questions on that later, I'm sure. So we'll move on to the next poll. So the question is, has your company explored an alternative payable financing solution outside of traditional SCF solutions? Again, yes, no, in discussion. Okay, that's changing, okay. Okay, so 50% of you have, so I mean, that's what I was expecting. We're seeing that having the opportunity to have it within your hands, within the Treasury organisation is super important. And we're seeing that change over the last few years. It's very common practice. I think people that are used to supply chain finance programs know what a great solution it is, but also it's a very time-consuming offering. And it will always be here to stay, but also, again, it's quite a saturated solution to some extent. So I'm going to give you a client experience, one of ours, on supply chain finance. This was a very large manufacturer of electric motors that came to Albion actually during COVID times, so 2021. Purely remotely. And what they wanted to do, they already had a bank supply chain finance program. And it was working okay, but it wasn't hitting their needs. Their needs were to really scale this solution, so be able to provide this to multiple suppliers all the way down to the tail. Equally, they didn't want any no minimum threshold. So you will find with some potentially bank solutions that there is a limit of spend that is applicable for these programs. For example, in Albion, you could put the gardener on there of $120 spend annually. It really doesn't matter. It's not limited at all. And we're able to onboard very quickly. Typically, we're onboard suppliers with our solution around 2 to 3 days. So it's very streamlined. And equally, multi-currency and being bank agnostic meant that we could provide the funding across the board. 150 countries, in fact, is what we're able to provide supply chain finance to. And that's all via an SPV, under an SPV that we dedicate to our corporates. And there's a trustee behind that. So just to give you an idea, so we were able to go live after about 2 months across 10 buying entities. We initially went live in Italy. And if you see that there's the supplier countries there, we have Bosnia, Herzegovina, India, Italy, Poland, Romania, Turkey. I think you'll see that these are countries that a lot of people say are out of scope for the normal supply chain finance offering. Fast track 12 months time, we were able to extend that over another, I think 16 buying entities across another number of different countries, you know, that are typically seen exotic to some extent. This organisation was able to achieve working capital improvement of over 200 million plus, moving their average payment terms from 90 days to 198 days in total. So now we're going to give you a client experience about payment terms and how this differs. So this was a fashion house here in Europe that came to us. They understood that they didn't have huge amounts of leverage necessarily over all their supplier base. They wanted to deliver fast, quick working capital, and they were willing to pay for it. We were able to provide competitive pricing, and I think that's key. So supply chain finance, of course, is still based on the cost of borrowing, the creditworthiness of the organisation. So is payment with terms. And I think that's, you know, buyers that are interested in this are quite surprised how competitive this can be for them. Okay, yes, they pay the financing, but we'll talk about how we can move this into supply chain finance at a later point. So we went live in September 2023 across a 2-month period. We had 2 funding banks on this program. Went live with 72 suppliers. And for those, I don't know if any of you from banks in the room, we were able to get up to 95% utilization of facility within 90 days, which is completely unique compared to supply chain finance program. I'm sure many of you that are familiar with it, takes 18 months, maybe 24 months to get 50% utilization. So it's very predictable, it's very attractive to our banking partners in this respect. They moved their terms on average from 45 days to 150 days, improving the net working capital by 45 million. Okay, so we're going to do one more poll. So does your company actually use AI to support financial decision making? Bit different, they're not yes and no's here. Do you use this for working capital optimization, cost of goods sold reduction, supply chain management, or internal reporting metrics? That was one I thought would be the case, yeah. I mean, that makes sense, right? I mean, it's probably all around your KPIs, reporting out DPO, DSO, and other metrics, of course. So I think that's what I was ultimately expecting. But we're going to also show you on the next slide around how you can actually do this for working capital optimization and how we can help drive a business case internally for you as a corporate. So we use a third-party company that powers AI and machine learning, has a large database of supplier information, trade information in general, that they're able to provide, especially if you match it with similar sectors, the opportunity for buyers to understand what the working capital cash flow improvement could be. All we need is a segmentation of ERP data. By doing this, we will evaluate the cost of borrowing of the buyers versus the suppliers. We can match peers, so what your peers are actually being able to achieve with certain suppliers, and provide ultimately we provide this 9-box diagram as you see here, and provides you with the biggest opportunity. So the smallest amount of suppliers with the biggest amount of working capital benefits. But equally off the back of that, we provide scorecards for procurements. So they are now empowered as they go into these tough negotiations. And I'm sure for those treasurers that have had those discussions with procurement, and I remember my days at corporate, when they would always come back and say, yeah, but it's all about cost of goods sold in my world. I can't do working capital. The dichotomy is too difficult for us. Well, this is also empowering them and giving them a new opportunity to improve that. So we will segment this and be able to provide according to our product portfolio. So for those suppliers where buyers have great leverage with their suppliers, of course they should go out and negotiate terms and put them on a supply chain finance program. Ultimately, it really doesn't matter to the buyer if they go on the SCF solution. It's there to be used as a financial enabler. However, if you've got suppliers where you have little leverage or some leverage, you may want to consider putting on a payment term solution. So initially getting that working capital benefit without that initial engagement with suppliers and procurement, of course. Or those other suppliers that are completely out of scope, so think of the audit, the utility suppliers, as I previously mentioned, you could put them on this program to begin with to extend working capital. And then the idea over this is you initially get this, if you look on the right-hand side, sorry, you get this initial working capital driver, but then over time you create healthy tension between the treasury and procurement organisation to then drip feed it back over to supply chain finance, because of course you're going to get multiple benefits. You're going to reduce the financing cost that goes from the buyer back to the supplier. We're able to ensure that it is trade payable treatment, so therefore you're improving your DPO. And it's where ultimately you're adopting these programs. So we provide this, and they're able to share this with our corporates over a 2-week period. And ultimately, they will use this typically as their business case to the CFO. So I think on reflection, and one thing I want to also say is, just to conclude on today's session, so we talk about tariffs. Apparently no one's talking about it, which is very interesting. But that said, we have seen where some buyers are considering and putting suppliers where there's tariffs actually on a payment with terms extension to manage that cash flow. So you can ultimately use it like that. Also, we see a lot of regional diversity. So single source suppliers, I think, are of the past. You know, that's not ultimately hitting the right spot. So having diverse suppliers regionally, also supporting sustainability metrics. We're still seeing a lot of activity like that. Yeah, thank you for your time today.
I think the presentation ended quicker than audio
absolutely
could expect. So at least the mic is working again. Thanks very much. Maybe first some questions from the audience, and otherwise, I've written quite a few questions for you if you still have time.
So
sorry.
Yeah, absolutely.
Nobody from the audience? Or can I just... Just the one.
Hey, good afternoon. Can you share some more...
There's
sorry. Hey, yeah, perfect. Can you share some more insights in terms of the integration with ERP? I assume obviously there is, but yeah, indeed.
Yeah,
Maybe
I
some
mean,
more on the technology component of it.
Sure, yeah, absolutely. So, of course, we were founded by SAP. So we have a Albion payment method within SAP. So you could switch that on. We'll ultimately do SFTP connectivity. So we just need a file exchange from the buyer to Albion. We do not do that with the funders. We actually distribute these assets out to the funders without a connectivity in this respect. With payment with terms, actually, it's equally very straightforward, and we can even get this integrated on a manual basis. So we call this something called a spreadsheet converter, where we will receive a file prepared by the buyer, and then we run that through our system, and then they're able to distribute those assets. So it's very light touch. We try to now move this down to about a 4 to 6 week period, typically. But of course it's very dependent, of course, on the buying organisation and IT. So we do quote between 8 to 12 weeks, but typically we're seeing around 6 week turnaround.
Maybe if I can ask a follow-up question. It was about a few of your comments that I wrote something down. One was on how you see yourself in relationship to, let's say, the traditional banks from a cash management perspective. You say we're more seen as a kind of PSP, and actually it works really nice with the traditional banks. Could you elaborate a bit more on how you see that kind of collaboration and why it really adds value to have, let's say, both solutions working for you from a corporate perspective?
Yeah, I mean, I said banks are, I think when fintechs came out in this space, there was almost, are they challenging their market space? I think ultimately still majority of those assets are still funded by banks. So we're not taking that away from them. In fact, if anything, we're reducing their cost of operations. So I think that's I see this as is very much hand in hand. We're very much partners. So yeah, the value we were able to do with banks in particular, they see that now with this payment with terms solution that we're able to bring to the market is able to complement what they're already doing with their existing supply chain finance buyers, and they see this as a nice addition. So therefore, as we were seen to need to bring the assets to the banks, we've actually sort of gone full circle where the banks are actually bringing us the opportunities and we're co-originating together. So I would say this is a big mindset change by the banks in the last year or so. So a majority of our activity is via our partner banks that we've had long-standing relationships with. Some of the banks, I think we have now around 50 plus banks in our network, and some of them we're working with for 20 plus years.
Right. And in that kind of integration with partnership banks, does it mean that it's more as a kind of white labeled solution to those banks, or is it different?
No, we don't white label per se. No, they purely fund our programs. So we can, of course, introduce them to our existing portfolio, and then equally they are introducing us to new business as well. So it's I guess it goes a two-way flow ultimately.
Yeah, perfect. Another part of the presentation was more on your data analytics tool that you showed, and for me it was more like, does it then also mean, because it seemed that you're really able to capture the kind of value from supply chain finance or payment with terms much more. So how do you typically use this kind of tooling, and how does it also enable to have a more value-driven conversation with the CFO or the treasurer or procurement?
Yeah, I mean, it's always going to be subject to receiving that spend data, so it's not from our buyer prospect, so we won't ever be in our initial conversations. But once we get into our sales cycle and we start establishing what the opportunity or what they're looking to do, we're able to then establish where we feel that the benchmark of payment terms could be for that organisation. And there's various factors to consider. It could be sector driven, right? You know, sometimes you look at, I'd say retail, typically the average payment terms around 60, 75 days. But then when we look into more some manufacturing spaces, you're looking well into the sort of 150s. So it really varies. But I think once we have that data and we're able to tell a story back, especially to the procurement organisation, about almost there's all this low-hanging fruit that you're leaving on the table and your competitors are actually achieving it, I think that really resonates a lot with these buyer prospects.
Yeah. And could you even do those kind of studies without receiving the real data, but just based on your experience working across so many different industries, that you can say like ballpark figures if you're operating in these countries or in these kind of industries, or is that difficult? Is that too much of a gamble?
I'm not saying we couldn't do it, but you know, we like to work in a high accuracy space, I would say, and not over deliver, or so you know, probably underachieve and over deliver ideally. Sorry. So we wouldn't normally do that, but I'm not saying we couldn't give it a good stab in the dark almost.
Right.
But yeah, I mean, majority of things what we do is data driven. Yeah. Really, we can allude to client experiences that we have, case studies that we can share. Yeah. So we know what the opportunity potentially will be. But then there's always so many internal factors to consider, right? There's I think, and it depends on sector. I remember being in pharmaceuticals myself. They're very reserved and conservative. So even though they could move terms out to 120, 150, they never would. Yeah. They wanted to protect their supply chain. So there's so many overlays that you need to consider that we tend not to.
Maybe on the conservative part, because also that's my experience that procurement departments are also very conservative in sharing the kind of confidential data about their spend portfolio. So it's
absolutely.
So it's more maybe first step in the dark before you.
Well, we need to get to some common ground, exactly. So we will obviously share insights and be able to then move that conversation forward from that.
Yeah. Okay. Another question is more maybe from an accounting treatment. You say with payment with terms, it's classified not as debt. Could you tell a bit more? Because sure. I think there are quite some people who are keen to understand why it's not classified as debt.
Yeah. So, and to be very clear, under IFRS. Okay. So we have a number of these payment with terms programs out there across continental Europe and the UK. And we're obviously not auditors and we can't advise accordingly, so we never would do, but we can allude to what others...
All disclaimers are done.
Yeah, all disclaimers done indeed. What we've seen and what our corporates have been able to achieve across the Big Four as well is other payables classification, so it is improving cash flow and net working capital. The only difference is it's not improving the DPO. Ultimately, and you're not getting trade payable classification, so it is on balance sheet. But it's, if you look at your revolving credit facility, we are seeing times where ultimately this is actually coming in very comparable, and it's not debt. So, it's somewhat, I would like to think for a treasurer, a very easy decision to make if they're going to be dipping into their RCF versus the payment with terms offering.
Okay, thanks. Any other questions from the audience? Because otherwise I use all the time and plenty of other questions to ask. It's more about you. No? Then I will continue with two final questions, if I may. One is about sustainability. You already said that it's still an important theme for you. But before this panel, we had another panel here. It was also about sustainability financing, and one of the questions we had was, are financial institutions doing sufficient in terms of innovation on sustainable financing? And it was yes, or maybe no, or not at all, more or less that kind of. And it was quite negative. So
Sure.
How do you see your role in terms of financial innovation driving sustainability? Because if sustainability is still important, how do you drive these kind of financial innovations with companies?
Yeah, I mean, look, I think it's still important, but I think it's been put on the back burner for now. That's what we see. I think there's been a lot of other more mitigating risks that they need to overcome over the last few years, where ESG's sort of been put to the side. To your point, what we do, I mean, look, we're beheld by what the funders can do, and providing suppliers with a 10, 15 bips reduction because they score on an agency rating of 80 plus above, doesn't necessarily move the needle enough for us to be able to, I guess, run these programs through sustainability. So I think you're right with this previous panel that I still feel like there's potentially some greenwashing still going on, right. And it's not hitting the mark. But I think there will be a future for this where it will be very prevalent. But again, I think we're still way off. And you can see it in different regions. When I'm in the Nordics region, you see it's far more prevalent there, as opposed to, of course, the US. You're not seeing much activity for that.
Okay, thank you. Michiel.
You said you were joining or set up together with Citi and SAP.
Mm-hmm.
How do you compare to Taulia that's also been incorporated by SAP? Are you competing with each other, or do you have separate methodologies and payment terms? Is that also something that's offered through Taulia? Or?
Yeah, I mean, I previously worked for Taulia. You might not know that, but yeah, we do compete with them directly on our supply chain finance solution. I think, from what I understand, they're in a much bigger ecosystem, right? We're not part of SAP any longer and haven't been for a very long time. We do have that module still within SAP, which is super important for us. This is the most prevalent ERP. So to answer your question, yes, we do compete on RFPs in the payable space. But if you look at Taulia's portfolio, I think they really focus on quite a diluted portfolio across all the cash conversion cycle. I couldn't speak good or bad about them, of course, but we do see them, but possibly not as much as you'd imagine.
Okay. Last question from my side, and I would like to ask you whether you can give 2 very good reasons for those treasurers here in the audience who don't have a supply chain financing program yet. So there's a clear value proposition with the data analytics. It's something that you can calculate. You also showed us the kind of ease of implementation. So what would be the kind of 2 reasons to convince them to have a further conversation with yourself? This is why you should do it.
I think our solutions are, robust from a payables space, and as I was alluding to before, we only focus on payables. We don't dilute ourselves, so we feel like we have the most robust legal structure with the trustee model, with the SPV. We set up individual SPVs as well, so there's no commingling of assets, anything like that. So it's all segregated. So therefore, it also gives you that reassurance and risk management. If anything, God forbid, ever happens to Albion, we have our Deutsche Bank trustee behind us that will continue to run this as BAU. So you have that complete reassurance. I'm not sure you could say that about some of the other fintechs in this space. So that would be one reason. Of course, I think obviously the main objective, I would assume, for treasurers to deploy supply chain finance programs is where they're looking to grow, of course, and go into an M&A activity. And ultimately, this is probably the best way to do it. one part for one component, of course, but coupled with receivables and any inventory management, then the collective across the cash conversion cycle is super important. And because we have that analytics, which we believe is leading in the market, it will provide you with that business case to then take forward to all the necessary approvals. And then ideally you will want to continue with us in this. And I would also say one last other point, sorry. You could, because we're all of our products are on the same legal structure, you could switch between supply chain finance and payment with terms, switch in and out, which I think is also quite unique.
So not 2, but 3 very valid reasons.
Exactly. Well, I could go with. There's probably a few more, but you know. I don't
Okay. Maybe.
Yes, yeah.
Then I can imagine that you can continue. But I think with those, let's call it 3 call to actions, I think I would like to thank you for your presentation and also for answering a lot of the questions that I had. So thanks again, and for those interested, Orbjan is downstairs as one of our partners in the exhibition floor. So thanks again.
Yeah, thank you all. Thank you.